Hi, welcome to the Valuation Dashboard run through for the week ended the 12th of July. This week we've obviously seen markets down quite heavily on the back of concerns in Europe. I'll run through a quick chart on some of that in a minute. Just for the moment I wanted to have a quick look at PE ratios and earnings forecasts, which are still staying that very high. We haven't seen a lot of change in the 12-month forward earnings over the last little bit. PE is now down to 11.1 after a relatively poor day on the market yesterday, down almost 2%. I think one of the keys there is the earnings downgrade, where we're actually seeing that, and I'll go into a little bit more detail on that in a minute as well. I think the key there is we're seeing upgrades from some of the resources sector and BHP in particular, that's offsetting a lot of the downgrades we're seeing amongst a lot of the other stocks. The other thing, I guess, adding a little bit to our view that we think there should be some downgrades. You're looking here at Bloomberg numbers. Now, I'm not quite sure how they get to their Australian EPS growth. I'm looking at a number a fair bit lower than what they're saying, but certainly Australia looks very much an outlier there when we compare the EPS growth of a whole bunch of different countries to the PE that the market trades on. So the world average sort of sitting a bit above 13%, probably about 14%, and about 11 times PE. Australia sitting, according to Bloomberg, almost 20% EPS growth. So definitely a bit higher there. Other key measures over the week in terms of bonds, we didn't see a lot of movement in triple B bond yields. They've been relatively stable over the last couple of weeks. CDS spreads shot up dramatically at the end of the week. That was largely similar to what we're seeing in Europe. In terms of government bonds, we certainly saw government bonds down dramatically there, down almost 0.3%, both at the 10-year level and at the 2-year level. Switching to have a look at CDS spreads and what we've seen there, the Spain and Italy certainly spiking quite dramatically over the last couple of days. Italy now as high as it's been at any time in this over this crisis. Spain back to levels that we saw similar to the start of the year. I think it's probably, and this what we're looking at here is CDS spread, so basically the cost to insure these countries against default. I think it's probably safe to say, Ireland, Portugal, and Greece, given the levels, it's effectively uninsurable in terms of the probability the market's putting on these countries defaulting. But the big concern is Spain and Italy, where the debt levels and the ability of the euro to actually handle defaults is it's quite possibly incapable of handling defaults, given just the size of the debt within those two countries. Now, jumping to earnings, and what we're looking at here is the change in 2012 EPS forecasts over the last month. So the greens show upgrades to forecasts, and the reds show downgrades. You can very clearly see that the mining sector has just dominated the upgrades, so all green throughout that. On the size of each of these blocks represents how big the company actually is. So if we jump into resources, we can see, relatively broadly across all the mining sector, some of the energy stocks are going the other direction. Then if we jump into the industrial sector, we can see that's certainly a lot more red within that, and downgrades pretty much across the board amongst these large cap industrials. What's a little concerning to me, or what I suspect we're going to start to see a lot more of when we hit the reporting season, is that we have still seen a lot of upgrades amongst small caps. So this is now looking at the same graph, but just for the small caps. You can ignore the startups. These are all the resources companies generally that aren't making a profit yet, so earnings upgrades and downgrades are a little bit spurious there. But if we jump into the industrial sector, we can see that it's very mixed in terms of a number of companies being upgraded as well as a few being downgraded. I think what we'll find is that as the reporting season rolls on, a lot of these companies probably haven't really looked at 2012 numbers yet, and what analysts are forecasting, and put their own budgets together. And so what we'll find is, as reporting season rolls on, I think we'll see these numbers being downgraded.